Well, hello and welcome back to another Trade for a Living video with Tradesmart University. This is getting into trader tip number 13, which means today we're going to be talking about the stochastics indicator. Stochastics indicator, in case you're not familiar with it, the stochastics indicator is actually one of the most reliable and trusted trading tools available. It's actually been around for quite a while, as it was created in the 1950s by a guy named George Lane, and George put this formula together, started working with it, and it has just turned out to be a great workhorse of the trading community for all these years here, and it continues to provide excellent signals year after year. So you may be wondering, if you're not familiar with this little indicator, what exactly the stochastics indicator is. Well, it is an oscillator-based indicator. What does that mean? First of all, breaking down the idea of the oscillator, just take a look at this picture here, and you see how the lines are just going up and down and up and down, very much like an oscillator, kind of like a sine wave, and it oscillates back and forth around the middle point here, and that's where it gets its name, an oscillator-based indicator. Now, this particular type of oscillator, the stochastics, is built within a range. It is specifically stuck between 0 and 100. 0 is the lowest reading that you can get. 100 is the highest reading that you can get. And inside this range-bound oscillator with a maximum reading of 100, a minimum reading of 0, it actually can give us 3 different types of signals. So let's look at those 3 signals. The first signal we're going to get is what we call an overbought, oversold signal. The second signal that we're going to get is what we call a buy-sell signal. And then finally, the third one is what we get, or is what we call, I should say, a divergence signal. So let's take a look at each of these and show you how they kind of all appear. The first one we want to talk about is the overbought, oversold. This is kind of the most common type of oscillator signal that we get. And the way that this works is whenever the indicator cycles up to the upper area here, that's where we start to get overbought. Now, on the particular indicator we're looking at, the stochastics, that's typically going to be around 80% on the line of 0 to 100. About 80 is where we call it overbought. And whenever the indicator starts to get overbought, this is showing that the trade has gone a little bit high, and maybe we need to cycle back down to the lower area. So then you get down here to the bottom, and, well, look at that, where it's green. This is oversold area. Now, oversold on your stochastics indicator is typically going to be 20 or below. So anywhere from 20 all the way down to 0 is what we call oversold. So again, overbought indicates that the trade has gone high and it's going to cycle down, and oversold indicates that the momentum has gone a little bit low and it needs to cycle back to the upside here. So that's the first signal that we get with the stochastics indicator, overbought and oversold. Now, the second signal we get are the actual buy-sell signals. And this is going to show up. You notice how these lines are crossing? That's going to be your buy signal. If you're oversold and it starts to cross up, that would be a buy signal. If you're overbought and it starts to cross down, well, that's going to be a sell signal. And so if you look at the chart itself, you can see, wow, that buy signal was pretty good. That was right at the bottom of this swing. And you look at the sell signal here and you say, wow, that sell signal is pretty good. It's right at the bottom of the swing here. Same thing with this little buy signal right here. Look at that. Right at the bottom of the swing. And just after the top of the swing here, we get a sell signal. And so these signals become very good. There's another buy signal here right at the bottom, another sell signal right at the top, another buy signal right at the bottom right here. And so, these buy and sell signals become very, very good signals that work really well, especially in certain market scenarios, which we'll talk about here in just a second. The third scenario, the third image that we get from our oscillator here, from the stochastics, is what we call divergence. Now, divergence is going to look like these 2 lines here. Do you notice how one line is trading lower, mapping out lower lows? You see the lower lows there? And if you look at the oscillator, it's doing the opposite. It's actually making higher lows. Well, this is a scenario that we call divergence. In this case, it's a bullish divergence because the trend of the stock is trading bearish, but the actual oscillator is starting to trend bullish here. And it's called a bullish divergence, and very, very often this shows up at the end of a trend. And so that's certainly what we see happening right here. This Caterpillar trade was trading lower, getting closer to the end of the trend here, and then before you know it, this trend has moved from a bearish trend, in this case, into a bit of a sideways channeling type of a trade. So that's your 3 signals that we get with stochastics: overbought, oversold, buy-sell signals, and then, of course, your divergence signals. So when do we use this tool, and when do we get these signals and put them into context? Well, there's really 3 scenarios that are kind of ideal for this tool. It is an excellent, excellent tool if you're in the middle of a channel. So for those of you who are already familiar with the concept of trading a channel, well, this is an excellent tool for giving you great buy and sell signals in a channel. If you're not familiar with the idea of a channel, just reference the other Trade for a Living video where we talk about trading channels, and then that will make a little bit more sense to you. But for those of you who are already familiar with it, this stochastics indicator is going to give you a great tool for getting buy and sell signals there. It's also going to give you a great signal for signaling the end of a trend. So during a channel, an end of a trend, and of course, very powerful divergence signals that again show potential ends of the trend. So let's take a look here at the channel. First of all, channel is when the stock's moving sideways between support and resistance. So we see that happening here with this Caterpillar trade. You see that sideways move, and if you look right below it, you say, wow, these buy and sell signals are lining up really great. If you were to track these, you realize that each of these are usually within about 2 or 3 trading sessions of where the turning point is. There's one in here that's actually a little bit early, which is always kind of nice when you get an early signal. But normally it's within 2 or 3 trading sessions of the actual turn, and sometimes it's exactly the day of. So those are your buy-sell signals in a channel. In a channel, again, your stochastics are going to be your best friend, a great, great tool. Now take a look at the end of a trend. Here's an example. This is actually moving into that channel here. It's the same picture. But look at the end of this trend. We had a solid divergence. That was showing the end of the trend. We also had a buy signal right here showing the end of that trend as well. So that's really solid. And then if you look up here at the top, you see the one that I've actually highlighted. This one's showing to sell the trade. That was the end of the bullish trend that was preceding. You can't see it because the bullish trend was actually to the left here. It's off the chart, but that was a bullish trend. We hit the top of that bullish trend, and we got the exit signal that said to sell the trade. So we got some very, very solid signals here from our stochastics indicator. And again, this is a great tool. It has worked for years. A lot of traders love to work with it. It's a free tool. It's included in pretty much all of your basic charting softwares, so there's no excuse to not be working with it. Now let's talk about the settings really fast here. I use a full stochastics. Whenever you set this up, you're going to find a fast and a slow stochastics. I use the full stochastics, and I use a %K for the %K line, a setting of 13. That's the %K. Now, if you want to work with a 14 setting, that's fine. A lot of people use 14. I use a setting of 13. And then for the %D line, I use a setting of 5. So 13 and 5, that's the %K and the %D. And then %K is going to have a smoothing period of 7. That's kind of like an average of the %K line. And so, you know, some indicators or some charting softwares, I should say, set this up. They might call it the length. They may say the setting. They may call it days or bars, all sorts of different names. But you're looking to set that number for %K at 13 and for %D at 5 with a %K smoothing of 7. All right, so that is your stochastics indicator. Now, if you want to learn some more about the stochastics indicator or anything else in trading, well, of course, why not give a shot over here at the Tradesmart All Access memberships, where you can learn everything you need to know about your stochastics indicator, as well as all of the other indicators that we work with. We got hundreds of hours worth of training, all available on demand for one monthly price. So if you want to learn some more, well, you can head on over to Tradesmart University. You can click here and go to Tradesmart U. Or if you just want to watch more of these videos, well, why not subscribe? So either click here to go visit our website or subscribe. Click here to subscribe and visit us over at www.tradesmartu.com. I hope you've enjoyed this video. If you want to watch some more, again, subscribe or just look around our channel here, and we'll look forward to sharing some more great Trade for a Living videos with you. Also, if you have a request, if there's a video you want me to put together for you, just go ahead and send it in to us, and I'll see if I can't get that in the queue and get that video created for you. Thanks for watching, and until we get to meet again, happy trading to all of you.